Good morning, everybody, and welcome to Option Pit. It is I, Andrew Giovinazzi, Chief Operating Officer of Option Pit, filling in for Mark Sebastian, who is in Canada getting ready to film a 1-hour show on TV, bnn.ca. Go look for him today, this afternoon. I don't have the exact time, though. Anyway, for our event, we're going to do diagonal and calendar trading this weekend, so what we'll do is it'll be a kind of a beginner calendar course for like the first 30 minutes for nobody that's really taken kind of one of our calendar time spread trading courses. Then it'll get kind of the more advanced stuff that, with some with portfolio margins, some without. Different ways that we use diagonal spreads and short calendar spreads of that nature with different market conditions. So, I'd say the first hour will be kind of like beginning, intermediate, and at the end, the last part of the course will be more advanced. All right, and that will be this Saturday, starts at 9:30 Eastern time. For all you Option Pit subscribers, live or above, it is free. Another good reason to be an Option Pit Live subscriber. And according to my schedule, it is going to show up. It will show up on Saturday here. Probably will post it Friday night for Saturday. All you Option Pit Live people just go to the link. Alrighty, and with that, I've written some blogs last week about volatility, the term structure. A lot of people have been sending me. There's been a huge interest in buying the vol products like VXX and TV. What is it? TVIZ? Yeah, it's TVIX. Let's look at a chart of this. The reality is, it had its move, right? Definitely had its move. And now it's going back to disintegrating again. Is the product a buy? Right? This absolutely, because I've seen a lot of this, I'll just say this is my least favorite vol product. Right? There's more that are, but they've been delisted. I just don't think this is a very good vol product because of the creation units and things like that make it sort of unstable. I think is a poor product, and yet it still trades volume. Let's see here. Yeah, it's trading 37 million shares a day, 5 million already, and it's an awful product. It does not do things in a reliable way. So, is this the bottom of volatility? Well, there's a couple things about volatility. One is we know that it's a reverting product. It mean reverts. Here's the SIBO VIX. The VIX itself is kind of hard to trade. We create a lot of classes on the VIX. You can go to our website, to our store, about how to understand and trade the VIX, trade the vol products. They're all kind of unique, even though they trade volatility. But mostly, really, what they all trade is term structure and VIX. And what we still have, okay, and this is the laid picture, okay, we still have two solid dollars of contango in April. We haven't seen this kind of pricing in a very long time, except for the last, let's say, week and a half or so. You have to go back to July of 2015, and really even prior to that to see the $4 we have in May. So notice, the FAR term hangs around 20, and then the term structure slopes. So all those vol products, okay, they're buying all these futures, right? That's what they do. They buy them in different ratios, but they're still buying them. So even if VIX makes a move higher, even if the cash index does make a move higher, the products are going to be relatively slow to respond at the outset. Okay, so if you're loading up trying to buy a VXX, a UVXY, a TVIX, again, I do not recommend the TVIX at all in any way, shape, or form, because I think it's a broken product. You're buying a very expensive term structure. So again, we have classes that basically teach people how to trade the vol products. As of right now, this is what I think. Yellen basically just said they're not going to do a lot of rate rising because of market conditions. The market seems to not think they're going to do anything with rates the whole year, given how everything else is going. This could be slightly inflationary, which I think is what they're looking for. But it's taken, apparently the rate issue was one of the bigger drivers of volatility in the market. Maybe that starts to calm down things for Europe, China, Japan. I don't really know, but right now that's what the market thinks, right? Because in 3 months, we're clearly at the bottom of 3-month range in vol. It will not surprise me if VIX trades in the 12 handle this week after the non-farm payroll number as we get into earnings. So we're gonna for one of the times that I can remember, we're gonna have it's very possible to have very low VIX, a very low overall volatility into earnings. So where actually I think the index volatility at that time might be a little underpriced, and we'll see. Because now you're pricing in really that the market can't move anywhere, and what's happening lately is we're up almost, 2% in 3 days? So you're holding on to a 3-day a short-term position, and you get a 2% move in 3 days. At 13 vol, you can make money in that. So we're probably getting to the point where the VIX futures now, with VIX here, it's harder for VIX to go down. Like the drops will be slower, and the futures will decay. So everything should be, theoretically, happening a bit slower. Well, see, that's the whole thing by one of my clients. He's like, why do they want to, right? Why do they want inflation? I think the EU needs inflation, right? All these central bankers get together and they talk. But all my opinions are just opinions about rates and where everything's going. What I do look at is I look at what they said. I look at the commodity prices going up. I look at vol going down. And I'm just saying that's what the market thinks. Somehow, some way, they're taking a little bit of the top layer of uncertainty out of things, and vol goes down. But where the volatility is, and I will say again, the volatility is in the premium in the VIX futures. You're seeing I believe, a year low for VIX options. Right, we're trading 74 volatility here. That's got to be the low tick for volatility in the last 3 months. Right, and pretty much that's where we are. So again, the vol is not in the options, it's in the futures. That's where all the premium is. So we've had several plays in our strategy letter for that. It seems to be working out okay. And we'll take it from here. As far as where the market goes, I still say relatively low volatility unless there's some other kind of, China does another strange devaluation. Doesn't look like, it's just looking for, again, the reasons that were upsetting people at the beginning of the year don't seem to be there right now. And it's kind of shaping up a lot like 2015 sort of did, even 2014 at the beginning of the year. So anyway, they're knocking the rate uncertainty out, and that's what we got. So as far as stocks go, you stay out of the way, and on we go. All right? All right, everybody, have a good day, and I will be back in the chat room shortly.